Good evening, everyone. Thank you so much for joining in for our healthcare growth opportunity. This is an extension to the opportunity which we are just about to close in the coming week, which we launched about 2 weeks back. We are almost 90% subscribed for that particular opportunity. We got a lot of feedback from our investors who wanted us to move this into a growth opportunity, and hence we have looked at shifting this into a growth opportunity as an opportunity for the second tranche, what we are opening up as of now. Just to give a glimpse to people who don't know about growth, so this growth opportunity is for short-term opportunities which can range anywhere between 1 to 3 year kind of an exit horizon, where we make little substantial returns starting from at least 16% odd up to 20-21% in terms of opportunities is what this is. So this could be for any off-market opportunity. Like I said, for short term, it can be tax efficient also at the same time because we structure the products in such a way so that long-term capital gains can be implemented for the return you're making. We manage the entire thing and everything is securitized with collaterals also on the same time. It's a great portfolio diversification for investors. One is to keep enjoying the rental returns, and the other one is for those investors who are looking for short-term opportunities where they want to keep investing and keep exiting and keep reinvesting and keep exiting. So 16 to 17% is what these kind of investments typically would make, and hence will be far superior than the normal returns what we are able to make as such for our investors. Just a little glimpse about our previous two opportunities, and Devrat will take you guys through in detail about both the growth opportunities which we rolled out about 6 months back. Devrat, up to you.
So, hello all. So, this is going to be our third opportunity. Before that, we'll just touch upon the last two opportunities that we had rolled out, one in Bangalore, one in Pune. Bangalore being a 770,000 square feet of office space, grade A plus asset in Koramangala, Bangalore. And Pune, again, a mixed-use development with the industrial facility plus office setup. So, again, both the opportunities have done well for us. And we would, want you to take you through what we have achieved in each of these so far. Okay, now how does Strata manage the growth assets? So as you all know, growth assets are pretty different from your plain vanilla asset where the asset is already there, tenant is already there, and we do our due diligence and get the asset on board. In growth asset, we have to, take certain steps back and also analyze that is the land compliant, who is going to be the project management company, how are we going about taking all the approvals in place, how do we also parallelly go for the required debt to ensure that there are stringent mechanisms that are put in place by the bank so that there is no risk of default as such. And how do we ensure, getting all the past reporting that has to happen on a weekly, monthly basis that we can also share with you on a regular, at a regular interval. So if you see, I'll just quickly touch upon greenfield development study. So this particular study is what we take to ensure that we have all the compliant norms to build a specific asset class. So right now we are going to talk about hospital in present case. So for example, we have to build this hospital healthcare asset in Hosur. So for this particular land parcel, we did a greenfield development study with Colliers, which helped us understand what all are the statutory approvals required, what is the current land zoning, how is the topography, is it a flat land, it is a contoured land, and all the planning and authority compliance, what we need for this project. So that is something we did. Now appointing of a reputed PMC. So for example, again in Koramangala, we have appointed Colliers as a project management company, which helps us monitor the overall project, get all the vendors on board, and helps us keep a close track on how the overall project is progressing with respect to the milestones. Again, escrow mechanism and lender independent engineer, both these things are sort of correlated and put in place along with the bank that participates in the overall funding of the project. Lender independent engineer is appointed so that all the invoices, etc., that we pay for, all these are vetted against whatever are the materials supplied on the site and the construction progress of the project. So there are no leakages whatsoever. Then we have touched upon the reports, and regular site visit is not only done by, I mean, we don't only rely on the project management company, but our team again does a very frequent site visit to ensure the project is progressing at the right pace, and frequent investor site visit. So recently, last week alone, we have scheduled a site visit for our Kormangla asset, where a couple of investors got to see the real situation at the site and how the project was progressing. And we did a webinar again on the Kormangla Bangalore opportunity, so that as investors, you know from time to time how the project is progressing, and you are up to date, up to speed with what's happening. Now we'll again go in a bit of detail. So Bangalore growth opportunity again. So this particular slide is just to show you what kind of guardrail and mechanism we put in place to ensure each and everything is tracked, each and everything is audited, and all the monies which are paid is against the right progress report. If you see on top, these are the three co-owners of the project. All our investors have invested in SPW Realty. There is a company called MIDCL, which is the development manager, and upon mutual consensus, we all have appointed Colliers International. So Colliers, quick brief on Colliers. Colliers is one of the most reputed international property consulting company, and they have done projects for likes of Embassy, RMG, etc., turnkey projects, and project management expertise. They have a very, very solid track record and have delivered over millions of square feet across pan India with grade A plus rating. Then on your right, if you see SV Engineering, so in the last slide, I touched upon lender independent engineer. So this again reports into the bank who is providing the debt. So this is the biggest guardrail mechanism, because more than any investor, banks have very, very stringent norm and audit in terms of whatever, even a single rupee that goes out of their account towards any project where they are disbursing the money. So again, at bottom, if you see, these are several packages. So in a building, you have to excavate, you have to build the structure. There is facade, there is electrical, plumbing, and then overall master planning and landscaping. So these are the various packages that you see. So currently, we are at ground engineering and excavation stage, and we have appointed TJ Naik as the vendor. TJ Naik again comes with a solid 2.5 decade of legacy, and they have worked for the likes of Prestige, Infosys, L&T, etc. And balance vendors will be appointed as we progress in the project. So this is a very interesting slide. Everyone should know the kind of reporting and the kind of detail that we get from the project management company. If you see, you can see, shoring and excavation substructure and then close out. Here, all the various milestones are mapped against the timeline. And on your right, there is a pie chart which shows the number of days elapsed and number of days left towards the project completion. Similarly, the bottom line will show you the efficiency of all the human resources that are deployed on site. So all the laborers and what is their productivity time to time. And then again, it also gets into further detail, like likes of plunge column, retaining wall, when it was planned, what is the current status, how are we progressing. So all these details are captured here. But in general, I mean, this is what we get, but we have tried to simplify in the further slide for your consumption, and we will continue to do that on a regular basis. Okay, so again, this is the slide on Kormangla project. So we have reached 7% completion, where guide wall casting is ahead of time. It is completed 100%, excavation and earthwork, which is currently at 6%. And thereafter, you see individual elements that are parallelly on which work is happening parallelly as we speak, and we are scheduled to reach the estimated completion on or before July 26. Now, this is just a glimpse of last week site visit that happened. On your left, you see all the investors along with site engineers and asset management team went to the site. All the cranes, etc., you can see are already parked, and the work is happening at full swing. Here you can see the project management entity representative explaining all the investors about what is the progress on the project. Now, Pune growth opportunity will quickly touch upon with a good news, and we'll be scheduling a detailed webinar separately for it. So in Pune, we have signed Sundyne as our tenant, and this happened under 7 months from the launch of this asset. Sundyne again is a US-based, US headquartered company and a leading manufacturer of your precision engineered pumps. And it is noteworthy to note that this is going to be their first legacy factory in India. So that is a big achievement from our standpoint. And again, as a company profile, Warburg Pincus, if you know, it is one of the biggest private equity company. They are also one of the largest investors in this entity. Left is the timeline. So project design is already finalized. Tenant is already onboarded. 80,000 square feet is what they have signed with us. Approvals and applications are in progress, and we are confident to hit the ground in the next month.
So just to add on, both the opportunities for the one which we did for Bangalore growth, which was in Korbangla, was again a 2-year, 3-year product for investors with an exit where they were going to make about 16 to 18. They're on track to make on the same grounds what we had identified. For Pune growth, also we had identified 16 to 18, and this was a speculative just land opportunity, nothing else. Here we're hitting close to about 20-22% in terms of our returns to our investors if they decide to exit. Obviously, otherwise they're free to stay invested in this property because Sundyne is a very, very large company into pumps and compressors which these guys manufacture for oil and gas applications. Again, investors get both the options, take a 20-22% kind of an exit or decide to enter and stay invested because we have a 10-year lock-in kind of arrangement with this particular tenant. So both the opportunities were a little different. The whole idea of giving you a glimpse about these opportunities was to give you an idea about, hey, how the current growth opportunities will function so that you can get an idea about what all we will be doing in these particular growth opportunities as well.
So before Sudarshan takes you through the current healthcare growth opportunity, I'll just quickly touch upon Hosur as a market. So Hosur is more like a satellite town for Bangalore. In fact, if you see, for all practical purposes, people believe that Electronic City is the fag end of Bangalore towards the southeast quadrant. But then there are areas like Bomasandra, Anekal, Atibele, etc., which are again part of Bangalore, but rather more closer to Hosur versus Bangalore Central as such. So just to give you an understanding that even in these areas, right, beyond Bangalore, which are closer to Hosur, we have certain key development that is happening there. Like Siemens is coming up with a 2 million square feet office campus. You have likes of Brigade Shobha launching massive townships of 6 to 7,000 units as such. And then again, if we categorically focus on Hosur in isolation as well. So Hosur economy is alone believed to be over 3.5 lakh crore big. Over 3,000 medium and small companies are in Hosur. It is also envisaged that the 13th fastest growing city worldwide in terms of population at a rate of almost 6%. And if we just look at the past trend in last 6-7 years, there has been investment of over 25,000 crores across aeronautics, manufacturing, healthcare, all these sectors in terms of the factory and manufacturing setup. Over to Sudarshan.
So just to add on, just to give you from a location standpoint, like I said, it's just off Bangalore where Hosur starts. This asset is pretty much in the central part of Bangalore. There's a bus stop coming right next to our property, which is going to be the largest bus stop of this particular market. But Hosur, from an iPhone factory, again, the largest iPhone factory, to Delta Electronics is largest factory in India, to the latest, it's now become a furniture hub because Nilkamal, Duraflex, Wakefit all have their factories over there. Electric vehicle, whether it's Ola, Ather, TVS, everyone's manufacturing, including the new division of Ashok Leyland, is also right opposite to our premises as well. So a very strategic location from a market standpoint, and hence the opportunity was very exciting for us from a market standpoint. So the phase 2 of the asset is about 102 crores odd. 65 is the equity investment from the investors, and 67.7 is in the form of debt, which has been pre-sanctioned by a large bank who will be doing it. We've kept an IRR of 16 to 18% just because of the floating debt ratio. Otherwise, we're very confident to hit anywhere between 17 to 18% to our investors, but we just keep a range in the event any interest rate goes up. But the lowest, we know for a fact, because of the kind of buyback opportunity we have existing, we know we'll be making about 16% for our investors. Just a glimpse, many who have attended the previous webinar are aware about the healthcare sector in general, but from a market standpoint, we've been studying this for over 1.5 years, met everybody, right from a Manipal to Aster to Apollo, Dr. Agarwal, Vasan, Shelby, Ujala Cygnus, and bunch of these brands. A lot of demand is moving in this segment for asset-light product solution, and we are trying to see if we can be the right partners in this segment to cater to this. Because the market also works around if you have a larger play, in the sense if you have more deeper into this segment, then there are no chances of you, somebody trying to screw around with you, number one. And second, you get the opportunity to be the first port of call. And second, for you to have better margins for you to make better returns for your investors. So that is the way we like to play, because that's how all the large funds, whether it's Blackstones of the world, have also continued playing. When they bought the entire malls across India before the Nexus REIT came, these guys very conveniently increased the rents for all the tenants by almost 20-30% before listing. They said, whether you like it or not, you can stay in the property or you can move out, because if you do move out, we'll move you out of all the assets across. So this gives you that kind of monopoly in some sense, and the sense of authority when you move into this segment as such. So that's a core focus area which we have, and where we can monetize more and more for our investors by having a larger market share in this particular domain. So just from an India growth opportunity standpoint, I think there is 2 times of current supply which exists is the demand which is going to be there for the next 5 to 6 years, and we feel we are probably we're entering in this segment probably at the right time for us to capture this market as. Just in terms of global hospital beds, we are 0.5 beds per 1,000. US is 2.9 beds per 1,000. China is 4.3. Japan is 13. Vietnam is 2.6 beds. So we are the most underpenetrated market. So there is enough and more opportunity for us to do it. Clearly, it's not a doctor or a patient problem. Looks like it's a very large real estate problem, because most of these guys, let's say like guys like Apollo, they always buy their own property. There's a limit to which you can keep scaling if you keep putting in your own capital, which is why most of the PE players who are now entering the hospital segment, the healthcare segment, is now going to a huge corporate turnover. Where earlier there were transactions where people used to come and give bonies of cash to them for all their treatments. All that thing is completely evading over a period of time. Especially even now with insurance companies, for that matter, have been mandated to start going cashless in a few years, compulsory for all the policies as such. So much and more action is going to be seen in this segment for it to become a corporate segment to what it is as of today as such. Just about some significant PE investments in healthcare. Manipal, funded by Temasek. Dr. Agarwal, funded by Temasek. Temasek is a very large fund from Singapore. It's owned by the government of Singapore. True North funded Manipal, Kim's, Cloud9. Sequoia's funded ASG, Global Healthcare, and Moodchand also at the same time. So why are hospitals looking at going asset light? Obviously, it's not the core function. It is diluting a lot of their operational capabilities and building a hospital, identifying instead of running an hospital, which is what the core focus is. Hospital is also seeing constraint in inflexibility in resource allocation for themselves, because they could use that same money and buy the best of equipment. They have to probably constrain themselves from whatever capital they have and keep doing it. Hence, many hospitals, let's say the operator we are working with, is just 2,500 beds in about 25 years, where it could have been with right partners close to about 5 to 10,000 beds with the kind of brand and the kind of business they are running as of today. So there is a lot of demand which we are foreseeing, and we're trying to see if we can be at the helm to capture all that demand and make capital for our investors as such. So again, just about our thesis, what we said, India needs close to 2.4 million beds to reach recommended ratio. So even 2.4 million, you're talking about 24 lakh beds. We are building about 2.8 lakh square feet for 300 beds. So you can understand how many lakh square feet is required for you to achieve that kind of thing, and the amount of investment which is required into a similar thing as well. So as Strata, we are now falling under the SM REIT. So eventually all the assets which we are going to bring out will eventually move through the SM REITs as well, barring the growth opportunity where investors will have to take an exit and they can reinvest if they wish to. in the SMRE platform once these assets will be listed. Devran did touch about Hosur as a market, so I'll probably just jump into what is the current hospital market. So most of the hospitals which you see, whether it's St. Peter's, Kaveri, Hosur Government, TSI, etc., barring a Kaveri, which is a very large private operator, most of them are government hospitals or medical colleges which have their own hospital facilities, etc. This hospital is also leased by Kaveri. They are expanding from the current facility. They are the partners for most of the large manufacturing companies in that market. And hence they have an upper hand because they know the market. They've been in the market for several years, and now they are looking at expanding further in this market, is why they've partnered with us. So it's just about 4 kilometers from their existing facility is where this new facility is coming up as such. Just an asset overview. So it's right opposite SIPCOT phase 2. In fact, on the left-hand side is where SIPCOT 1 is. So it's just off Bangalore from a market standpoint for investors in Delhi. Great. So this is the current location. Right opposite to the property is the ITC's hotel, Fortuna Hotel. So it's right opposite on that. It's on the National Highway 44. We are buying 2 phases of the land, phase 1 and phase 2. Phase 2 is for future development. Right now, only phase 1 is being developed. Hence, we have enough and more security cover as well from a market standpoint. But predominantly, this is what is the opportunity which we are entering as collectively, so that we have collateral on the entire thing. But eventually, the one which is being built is only this as of today. We will get rents for this and collateral also on top of this for this particular project. So the first 4 floors, which is ground plus 3, is already being acquired by our healthcare opportunity. This is, like I said, with the demand we had from our investors wanting to see if this could be growth because it was under construction in general and a build to suit with a kind of a buyback arrangement, etc., is why we then switched this opportunity into a healthcare growth opportunity. So the 4th to 8th floor will be part of the healthcare. So equal amount of land, UDS, and a ownership agreement, which will ensure that the floors are allocated on completion, will be the security collateral which we will be having with ourselves as such. So the opportunity is totally about 1,49,000. What we will be acquiring as part of this, part of the growth opportunity which we're doing. So the hospital amenities, it is going to be a radiology. It's a cancer hospital as one of the core focus areas, apart from other multi-speciality which we'll have. So, right from ICU clusters, chemotherapy, radiology, radiation oncology center, and bunch of other things which is required will be a part. Hence, the timeline we've taken 3 years because getting approvals for this as a process can take anywhere between 3 to 4 months. As such, typically, otherwise will take only 1 to 2 months because of the kind of investment the company, the tenant, is going to make for these kind of applications, for these certifications, and what all is required, is why it takes a little longer by another month or so. So the tenant would also invest close to equal amount of money. So we are in total investing close to about 200 odd crores from an opportunity standpoint. The tenant will also invest close to 200 crores in the opportunity. 150, 160 crores in equipment, furniture, fit outs, etc. We are giving only, cold shell building as such. The rest, everything will be invested by the tenant, plus a working capital, because any hospital, for a new hospital, takes anywhere between 18 to 24 months for it to operationally break even. And then it automatically pays itself as a center for the hospital as such. Especially these large brands who've been in this segment for over 20, 25 years. They know their trades, they know how to hire, build in the right processes, etc., because they've already done it. It's copy paste and probably keep improving from a system standpoint for the investments. So in terms and financials, like I said, the total opportunity is about 102 odd crores. The debt to equity ratio is almost 1:2. From an opportunity standpoint, it's been financed by Kotak Mahindra Bank or SBI. We have a pre-commitment from Kotak Bank. We will be talking to SBI because we can get better rates, which can enhance your returns for the investors. Hence, we can give a range to the investors because any interest benefit arbitrage which we can make, we will pass that to the investors because end of the day, you own your asset and you'll be getting benefit of any interest arbitrage which we can make for ourselves. Financial model for a 30 lakh odd investment return, it's close to 48 lakhs is the return. So net, it's close to 20% as year-on-year return. Just from an IRR standpoint, it will be close to 17% for our investors as such, because even your interest is getting compounded and hence your returns will be Like I said, close to 20, but from an IRR standpoint, it will be 17% for the investor. Multiple exit routes, while we have a standing offer to buy the asset from the same operator as well, but open market is one. Banks, we have an LRD option to exit. Plus, like I said, we've started our REIT application. In the next 3 months, we are hopeful we'll get the REIT application as well under the SM REITs. And that is also an opportunity for us to list the asset in the SM REIT and exit it for the investors to make the IRR which we are targeting for our investors in a 2 to 3 year kind of a time frame. So our investment thesis is clear. We are working with a 25-year-old brand, is PE backed, has a lot of skin in the game in this particular property as well. We foresee anywhere between 2 to 3 years. We've just kept 3 as an outer limit because any delays happen, there's enough and more cushion. Otherwise, it's typically 24 months plus 6 months grace. We've kept a 12 months grace just to keep ourselves more secure. There's no superior medical facility within a 20-kilometer radius. The next closest one is Narayana Rutale, which is close to 20 kilometers away, which is in Bomasandra, just near Electronic City. We have a 25-year lock-in and a 30-year lease with this particular tenant as well. Just in terms of project timelines, like I said, we have kept a 24 plus 6 months grace. We've kept an additional grace of 6 months for the investors. I mean, for in general, from a return standpoint, because we don't want a situation where the timelines committed gets deferred by any chance as such. So that's just the basic timeline of each and everything. What Devra did show you guys before about each and every update about the project. We will be sending you a monthly while we get weekly updates, which we'll be uploading around the circle for everyone to do it. But ideally, a monthly consolidated report will come from us to you on your email. So you will know each and everything on a regular timeline, whether we are on track, are we delayed, what is happening on a regular basis. For the first 6 months, you might not see a lot of traction as such, but eventually once we hit the ground, you would see regular updates. And then every quarter, we will do site visits for any investor who's free to come in. You're always free to come see the entire development, the way it is happening, for you to keep tracking, keep sharing your feedback, if any. But more importantly, give you full control to keep monitoring each and everything on what is happening on a regular basis as such. So in terms of investments for the investors, is minimum is 30 lakhs. Expected tenure is 3 years. Again, we've kept the outer limit and targeted IRR of 16 to 18. We are confident to hit anywhere between 17 to 18. But again, we've just kept basis how the interest regime may differ and the arbitrage benefit which we can give you is why we are doing. Like even for Pune growth, we had envisaged about 16 to 18. We are upwards of 20-21% for our investors in terms of return, and that too in just about 7 months. So again, that's a call investors can take, and it's also subject to property, how certain returns can differ as such. So in terms of risk metrics, very important to understand all the risks associated with it. Capital risk, it is very less because underlying is collateralized with the security which you have. So whatever OCDs which will be issuing will be with the trustee. Access trustee will be your trustee for those OCDs as such, and will be again asset backed. Underlying asset would be the land itself, which will be in part of the SPV. Liquidity risk, expect investment tenure is about 3 years. So investors will be provided an exit only through liquidity window at the end of 3 years, when we give a one-shot redemption for the investors. Those investors who decide to continue investing and want to enjoy rentals after that, we can figure out a structure around that as well for them so that they can continue enjoying. The way it is, you exit and you can reinvest into the REIT or into our other growth opportunity, other released opportunity, which already exists as part of the REIT, which will be. In terms of the construction risk and the real estate risk, obviously, we've done our legal due diligence. We've given the public notice. All that process has been done. We are registering the lease deed on the date of the land registration itself. So we are secured. We'll get the security deposit from the tenant, and whatever agreements which you need for corporate guarantees, etc., would be in place. Build process with a construction partner with a performance history would be driven in the next 3 to 4 months. So that by the time approvals come, we can hit the ground and the team would have been mobilized. But the entire project would be written by either Kotak or SBI, which would ensure that the entire funds are always routed via their escrow account to the vendors at any given point of time, subject to review of every LIE, lender independent engineer who Kotak Bank would appoint to keep monitoring the construction on a daily basis. From a tenancy standpoint, we have a 25-year lock-in lease with the tenant, so there's very low because we're registering the lease deed on the date of the land registration. So that's another collateral which is available for the investors. It's a solid operator with a solid track record and is backed by certain very, very large private equity funds who are backing them as such. You know about Strata. We today manage close to 1,800 crores, 3.5 million square feet under management. Have the likes of Puma's corporate headquarters, Rendox's only India office, AGS Healthcare's office. We have Swiss Bank's only IT development office again. Acco's headquarters, which is what we're developing in Bangalore growth opportunity for our investors, and bunch of other large clients which we have as such. So I'll just quickly run through and probably just move into the questions for investors. This is our financial model. Again, you can play around and get an idea about what returns are, etc. Performance fee will be on a hurdle rate of 10% for our investors. So ideally, we would not be charging any management fee to the investors for their investment. And a performance would be a 20 pips on top of the 10% hurdle rate, which you would be.
Sudarshan, I think you'll have to project the financial model.
Okay. Sorry, my bad. Yeah, so project this will be there available for you on your IMs will have it shared to you. Anybody, if they want, just write to us at hello@strataprop and we will send it to you. Again, we've kept an option of NRIs as well as for residents as well, so that people understand their tax implications as well, because there are certain different taxes as such. We are confident to achieve long-term capital gains tax for our investors so that it becomes a tax-efficient product for our investors post-tax as well. So that is how we have built this entire opportunity for our investors to ensure that they can monetize from a similar opportunity which our investors have already invested in.